Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. And with me now is Jason Burack of jasonburack.com, economic analyst and someone who's got a lot of insights into the real economy. Jason, welcome back.
Thanks, Carrie. I'm glad to be here.
We're thinking about energy because all this talk about the economy, we're looking at actually decreasing demand for energy in our economy and around the world, and yet the price seems stuck or perhaps rising a bit. Where do you think energy prices are heading now?
Well, I think we're looking at a higher trading range in a rational market, but we could have a large spike because of the geopolitical stuff that's going on in Iran. But in general, though, I think the trend is a much higher trading range. I think that's what the Saudis and OPEC want. They would prefer a trading range where the oil prices don't go necessarily too high and stay there. So, more renewables are more capitals invested in more economic renewable projects and those advanced biofuels projects and better nuclear power and stuff like that. And then they don't want them too low. They don't want oil prices too low. They don't want oil prices below $70 a barrel or even $80 a barrel for the most part, because then they can't fund all of the social programs that they have promised their own citizens. And that's part of the problem here, is that when the oil prices go this high, you're not seeing demand destruction. You're not seeing free market forces being applied to the oil market because, at $120 a barrel, $130 a barrel oil prices, there should be demand destruction like there is here in the United States. And in those OPEC countries, the oil is subsidized. And like in Saudi Arabia, I think they're paying 30 cents a gallon oil, and that's not going to conserve consumption. Carrie. So that's why you're seeing these large population increases in the last few decades in OPEC countries and Mexico and stuff like that. And I think it's put a pretty good price floor in oil. And like I said, I think there's going to be just a higher trading range going forward, except for like a potential geopolitical super spike in Iran.
Hey, did you happen to catch that article that supposedly India is going to purchase oil from Iran in gold?
Yeah, I saw that. And Iran has always threatened since the last regime came in. The Ahmadinejad came into Iran. He's been saying really some dangerous stuff there, and as we all know, Saddam Hussein, before the regime, the U.S. went in there with the military, Saddam Hussein started taking euros instead of dollars, and one of the things the U.S. government likes and benefits a lot from is the petrodollar system. So with some of these guys in the Middle East wanting to take euros or gold for their oil and refusing to take dollars, I don't think this is going to be allowed for that much longer. Let me just say that.
Yeah, honestly, I looked at that story. I don't believe it, because what's in it for India to start using gold? They've been accumulating gold, and we have a classic case of Gresham's Law in the international arena. They'd rather use paper, worthless paper, than part with any of their gold, which has intrinsic value, as we know. So there's something fluky about that story. I really couldn't find any place where it started and any place where it ended. It was almost the exact same story in every site carrying it.
Yeah, I mean, it's the internet, so people it's tough to fact check everything. But I mean, it is the internet, so your listeners need to really be careful about listening to just one source, and they should definitely do their own due diligence and fact check, multiple sources. Yeah. I mean, the thing about some of these news stories on the internet there is your listeners really need to do their own due diligence, and as good as one source could be, they really need to fact check and check multiple sources if they have the time to do so. Because some of these stories, you don't know who put them out there and you don't know how credible it was. So I think it's just important that people fact check, and if they have the time, they can, go and check multiple sources. It'll be interesting to see in the next couple weeks, though, if there's a conflicting story coming out about this. But as we all saw with what happened with Saddam Hussein and Gaddafi, and some of these other guys in the Middle East, if they start making threats to not take dollars as part of the petrodollar system, the U.S. military normally comes in very soon after.
Yeah, you think there's a connection there, huh? Who would have thunk? Well, it wouldn't surprise me, and I think Iran can make all the noise they want. We'll be hearing more about it, no doubt, in my mind. So one thing that I find kind of interesting, Ben, about the euro the past couple weeks, now in the past couple of days, the dollar is back over 130. I think it's at 131 today. What's your take on that with the oil prices and all?
I think 2012, I think we're pretty close to seeing a 2012 where the dollar index against the euro could go up, and then we're also going to see gold go up. Now, I know a lot of Austrians have said this in the past and called this decoupling, and there's a lot of different parts to the decoupling thing about the Austrians, but the main thing is that it's a contrarian view and that all assets don't have to move correlated or non-correlated to every other assets all the time. So I think what people need to take into account is that this might be one of the years where they will see the US dollar rise against the euro and some of these other G7 countries that have problems too, like the UK and also Japan, because Kyle Bass, as you know, is also predicting, I think Japan goes before the United States goes. Kyle Bass is predicting collapse in the Japanese government bond market and the Japanese yen in the next 2 years. And he says the dollar will be saved for last. So I think this is something that most people, most market commentators would dismiss. And I think you're going to see strong US dollar against the euro and other G7 currencies, and you're also going to see strong gold.
Yeah, which in prior years would have been considered a contradiction in terms, but now that these markets are so irrational, anything can really happen.
Exactly. And that's part of the problem, Kerry, with all of this printed money. And, you know, you're taught in basic finance, and if you worked in financial services or on Wall Street, that these asset classes are supposed to do one thing, like, you know, gold is always supposed to be a contra asset to the dollar. And if you go back and look in financial history, that's not always been the case. And Jim Rogers and other Austrian school people have pointed that out. And you just don't see the research like that, you know, in the mainstream. So I think this is something people are going to have to be aware of, is that all of this printed money from all of these central bankers is causing a tremendous screw up in the conventional asset allocation strategies that people have been, you know, tried and true and have said have always worked, you know, for many decades.
So let's say I'm Joe Sixpack, Jason, and you're looking for an investment here. You don't have a lot of money left, but you got some left in your 401k or your IRA. You have a little bit left. You got a little bit to invest. How do you invest?
Well, I think people should definitely accumulate physical silver bullion. And I think the best approach is to, you know, not buy all of your physical silver bullion at once. And I think for a wealth preservation and insurance strategy, that's really good. The way silver is taxed, if you sell it legally through channels and have a paper trail, it's not really an investment because of the way the government taxes bullion right now. It's taxed as a collectible and it's taxed as ordinary income. So you don't have any benefit from buying and holding it, you know, for over a year. But, you know, with that additional cash, besides just accumulating some physical silver on days when the price drops, I would also start, you know, buying quality gold and silver companies. I would look first for like the royalty companies, the streamers, because those guys have really good business models and the business model cash flows very quickly. And then I would buy the producing miners first. And then if you want to speculate with some additional capital that you can afford to lose the money, then I would go buy the juniors after that, after you already have the majority of your capital in safer companies that are already producing profits.
Right. Gotcha. And I think that's a pretty good conservative approach to it all, because I looked at it 4 years ago. I said, I see the dollar losing against the Canadian dollar, the loonie, and the Aussie dollar, and also gold, silver going up. So I looked at, you know, so many of the miners are Canadian and Australian, looked at some ETFs, and that was the right play. But now it appears the dollar's primacy is back, and now it's really some accumulation. I like CEF and GTU, but obviously we can't tell anybody to buy this stuff, but it's certainly something that people need to look at and make their own calls on it. But I think the concept of the producing miners or near production, probably a wise move.
Yeah, I agree. And, people fall in love with the junior miners, but the junior miners are something that, like, you have to sprinkle in. I wouldn't be able to sleep at night if I had all my capital or, 50 or 100 or 80% of my capital in junior mining stocks that were years away from production because of the volatility. I mean, one of the junior mining stocks that I was invested in, and I really like this company over the long term, over the next 3 or 5 years, and the company was at $1.80 a share. I think it was July or August of last year, and the stock dropped to 30 cents a share in only a couple months. And, most people would have panicked. And, I had additional capital lying around, and, I've been doing this for a couple years, making money investing in the sector. And I put the money to work at 30 cents, and I was like, nothing has changed with the company. The price just got knocked down. The stock price just got knocked down. And this is the type of discipline you need to do to succeed in the juniors.
Makes a lot of sense. All right, Jason, we gotta hit the road. Where do we find you on the internet?
You can find my work at my blog website at jasonburack.com, and you could also find our work at Wall Street for Main Street, which is WALLSTFORMAINST.com.
Yeah, one of my favorite sites. Hey, thanks so much. We'll check in with you in about 30 to 45 days, see where this is all heading. But I think your thesis is correct. It's going to be more of the same with gold and silver taking off. So, all right, Jason, be well.